Hello there, this is Bruce at Fleet Capital Management. It's Friday afternoon, the 31st of May, 2024, last day of the month for the markets and for the calendar month. And we've had a difficult week. I want to show you what happened this week, give you some ideas as to what I expect going forward. As always, this should not be a long video, so stick with me and I'll show you what happened, especially today. Today was an amazing day. We always need to say that the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. I'm always available, Bruce at fleetcapitalmanagement.com. Homepage of our website, fleetcapitalmanagement.com, two buttons on the right. This one takes you to the most recent videos. This one shows you my calendar so we can schedule a one-on-one Zoom meeting. As always, the single most important thing to know is whether the market is going up or down. Everything else follows from there. And even in our trading systems, these are just kind of the four headlines of our trading systems. You've got to know when to buy or when to be in the market. And that's our market timing systems. Then you need to know what to buy. And that's the analysis that we do to pick stocks. And we've done a very, very good job with that. When to sell, just to remind you, is our risk and stop management. And then, of course, how we handle earnings. So let's take a look at a couple of things. We'll start as we always do with our matrix, which is updated every day. Here is today, and you can see that group one, which is our shortest term analysis, it's using daily analysis. We're still in an up situation, which is very good. In our group two, which is a little bit more conservative, we're in an up situation, and I'll show you these on the charts. Using the daily moving averages, the 8 is above the 20 is above the 50 is above the 200. Well, that's a full-on technical bullish setup. And of course, if the 8 is below the 20, that's what we call a pullback. When the 20 is below the 50, we're in a correction. And if the 50 is below the 200, we're in a bear market. So that's how that works. Our most important bear market avoidance indicator is the weekly 10-20, and it's either green or it is red. It's green right now because the 10 is above the 20. And again, I'll show you all this on the charts. The VIX, which is the fear index, is at 12.87. We've got it like a stoplight. Green is 17 or below. Green, 17 to 20 is kind of a yellow caution area, and above 20 means there's an extreme amount of risk and the market is probably going to fall off pretty quickly. The IBD exposure is at 4, which is also green. So we are green across the board, even though we had a difficult week and a very strange day, which I will show you in just a moment. Going to our go, no-go charts, we're going to look at the S&P 500. On the right-hand side, I have the daily chart. On the left-hand side, I have the weekly chart. Okay, so when we look, we're still in that, this is the week. This was Monday, Tuesday, Wednesday, Thursday, Friday. So we're in that lighter blue or aqua, which is considered still a bull market using this set of indicators. It's not as strong as the dark blue, but that's normal. Again, in a rising trend, you're going to have dark blue, which is really strong. You'll have some pullbacks, but you're still in an uptrend based on this system. It goes into the aqua and then dark, aqua, dark, aqua. So that's all normal. This is normal. And remember, the amber colors are the called the no fish, go fishing bars, meaning don't do anything. We don't know what's happening. Many times it's a transition between a downtrend and an uptrend. Sometimes it's just a break within an uptrend. But right now we are still in, using this system, a go situation. The white is the 8-day, 20-day, 50-day, 200-day. So that we already looked at that. On the weekly chart, the most important lines, if you will, the dark blue is the 10-week moving average, and here's the 20-week moving average. And as long as the 10 is above the 20, we are not in a bear market. We are in a full upward trend. The white is a 2-week moving average. which I use for trading. The 2-week moving average and the 8-day moving average are really not trend following as much. They are more my trading signals. Okay, and I mentioned down here is a group of oscillators looking at momentum, where we are in the momentum, and we are right now on the 0 line on the daily chart. And what this little building is, you can see it went all the way up over here. That's kind of what we call a squeeze. You see how this was just going sideways? It really wasn't making any progress up or down. It was what we call squeezing. But I didn't sell out of this because our momentum indicator was just riding the 0 line. Then when it broke to the upside. We're starting to build what might be another squeeze. I'm not sure. We'll have to wait and see how that works itself out. Going over to our TradingView platform, again, we're looking at the S&P and everything is the same. We're on a daily chart. And I want to show you the 8s above the 20, 20s above the 50. We're also above those green dots, which is a chandelier exit or ATR. So everything is still fine. The only negative that I see on this chart that I really don't like, I've circled down here. This is the ADXDI, and the DI, the red DI, they call it the DI negative, has now crossed above the DI positive or green. That's not a good sign, but we have a lot of other things that are looking good, really good. So hopefully this will just resolve itself very early next week. I'm keeping a very close eye on this, but let's go to another chart. We'll come back to this one in a second. And again, daily chart, S&P 500. So we're all looking at the same thing. Today, if you can see, we had this huge bar. This bar from the top to the bottom was about 2%, if I remember correctly. It was almost, so from here to here, 1.78%. Okay, that's a really big bar. That's not a normal day. And since Monday, which is here, we closed up. That was really good. But then Tuesday, we gapped down and had a really small bar. We gapped down again on Thursday. That was Wednesday, Thursday. And on Thursday, we closed near the bottom of the candle. Again, these are not good signs. Today, we opened a little higher and then completely, I mean completely fell out of bed. This market this morning, I use the term bloodbath. I don't say that very often, but there was nothing but bright red all over the screen. This was a horrendous day. So before we get into how it closed, why was this day so bad, but I wasn't terribly concerned? Well, number one is I've got a trend line right under here. So even when it was down at this level, I felt, well, if it goes down any further, it's going to come down to this trend line, and that could be a good area of support. Then I have another system on here called heat map. I could tell, if you see this red, this was an area of support that I was looking at. And you can see it went right to the bottom of that area of support and then started to trade back up. So between this heat map area of support and this trend line, which could be an area of support, I felt that this might be just a month end or an algorithmic sell-off, but I felt that we had a fair amount of support in this area. And if you look down here, which is really on balance volume, it's a form of on balance volume. Even though we were down, we were still in the green. So that means there's more buyers than sellers, not a huge amount, but more buyers than sellers. So that's why I didn't panic on this. Now, here's the really good news. Good news is we came all the way down here, and then we closed the day higher. If we go back to here, let's see if I can make this a little bit bigger so you can see this better. You can see how the market came down. It came down to our ATR. It's almost at the 50-day moving average, and it closed right back up at the 8-day moving average. So a lot of good things I'm seeing from this horrendous day and the end of this pretty bad week. A lot of good things, one negative thing, and I always focus on the negative because that's kind of my job, and I'm looking at that to see. But all in all, the S&P for the week was down 0.07%, basically a smidge. For the month, we're up almost 5%. For the quarter, we were up 3.5%. So I'm not worried about all of that. So I hope that helps. The other thing is now we're moving into June. So let's take a real quick look at seasonality. And if we look up here at our seasonality ranges, and this goes back 20 years, I don't have anything taken out of this. I don't have any bear markets taken out of it. I don't have 2008. This is just raw data. June, what this is saying is the S&P closes positive. Now, positive could be 0.1%, but it closes the month positive 73% of the time. That's very, very strong. It has an average return for the month of 0.76. Nothing wrong with that. That's not a bad rate of return. Will we make a lot of money in June? I don't know. June can be an iffy month, as I've been telling you. July is a phenomenal month. So we really want to just ride through June and get to July, where the S&P closes up 91% of the time and has an absolute blockbuster. Now, this is on average, and you know about what they say about averages, but this looks good to me. If I look over at the Qs, which is the NASDAQ, you can see what a day we had today. I mean, this morning was just horrible, but we closed up near the high, not at the high, but we closed up fine. Again, I don't like this. I don't like that red is peeking out. But in any event, June on the NASDAQ is very iffy. It only closes positive 55% of the time out of 20 years. But when it does close up, it tends to give a pretty decent rate of return. But look at July. July has been up 100% of the time over the last 20 years. That's 20 Julys in a row, and it's averaged 5% rate of return. Both of these right before we go into the absolute crap months. August, September, first half of October are terrible months. Anyway, that's where we are, and I'm not real worried about it. One thing that happened, that I'm very, very, very rules-based. Let me show you, I think it was the company Salesforce. Bear with me one second here. Let me pull it up. I'll do it this way. Okay, Salesforce, we sold, I believe, let's see, yeah, right at that line, that was our stop. Pipes is the name of our system that we do our trades in. We sold it here only because it broke some rules, and I did not know that they were going to get crushed on earnings. I think they were down 23%. They're coming back up a little bit, but in this case, our rules helped us avoid a pretty massive drop. So again, you're not always right when you're rules-based, but you're right a heck of a lot more than you're wrong. And that's really all we can ask for. So that's the market for the week. Again, tough week. We've had some great stocks and some great stock gains. I'm not worried about that. But it's been tough, and now we leave May and head into June, and hopefully we will have a decent survivable June so we can look forward to July. If you have any questions about any of this, please let me know. It's really easy to get a hold of me, as you know. The first way is I'm always available on email, as I'm sure you're aware. My response time is very fast. And you can also schedule a call if you want to talk about anything inside your account or anything that's a little bit more personal. Let's do a video call so we can talk one-on-one. That's a story. Have a wonderful weekend. It's boating season out here in the Pacific Northwest, which, as you know, is my favorite time of the year. And I have been sailing and sailing with some good guys that I've met, sailing on my own, which I love to do. Tomorrow we're heading out to the islands in this boat, which is a Ranger tug. It's one of my favorite boats. So spending an awful lot of time on the water. But we'll be back together on Monday morning, and we will get this show started again. I'm always available. Let me know if you need me. Talk to you soon. Bye-bye.